Hello, everybody. Welcome to the first FinTech-Aviv event, live online broadcast. I'm so happy to see so many participants already joining, and I'm sure that we're going to have many more during the session. How do I know that you all hear me?
Hi.
Okay.
Hi.
Okay, wonderful.
We hear you well.
Thank you, Nitzan, also for writing. Okay, so we have a lineup, very interesting lineup for you today. We're going to focus today on the WealthTech, how we're going to manage our future, what are the trends, how the really expert traders are looking at the market in these really insane times with the coronavirus going on and the fluctuation in the market. Some rules for our session. One, you should all be on mute. If you haven't put it on mute, please do. So we won't interfere our guests and speakers. Two, we're going to use the chat a lot. So if you have questions, please, we really encourage you to write down, to everyone to build a discussion. And also, after each session, we'll have a couple minutes just for questions for the speaker, and see how it goes from there. So it was really important for us to keep ongoing connection with the community, to keep bringing you really quality content, both from us, our partners, our corporate partners, of course. So really want to thank you all for taking the time. I hope that some of you are not in quarantine, and the other that are still well, and at least you can enjoy quality content. You can check it online also on Facebook, on our webpage and FinTech-Aviv webpage, and also soon on we'll be live broadcasting also on YouTube. So for the lineup today, we're going to start. I'm not sure that these logged in yet. We're going to start with the keynote from our partners from Refinitiv. We have Jorge Tavio Ascanio, Market Development Director, focused on wealth of EMEA from Refinitiv. I'm not sure that is online yet. Maybe I see Sarah. Sarah, can you help us figure out if he's already here? Mm-hmm. This host. A second. I see here Advine Herman. Can you check with him, please, that he's logging in?
Hi, yes, I'm checking. Give me 2 minutes, please.
Okay, so meanwhile, I'm going to tell you what we're going to have today. So we will have 5 presenting startups after the keynote of Refinitiv. We'll have a VP Product, Ari Engelhardt from BondIT. We'll have VP Business Development, Gil Shapira from TeleMessage. We'll have the co-founder and CEO of Einer First, Yaron Gallagher. We'll have the CEO and co-founder from Cred, Ben Freud, and the CEO and president of Fincom, Gidon Drori. Now, they're each going to focus on how they look at the market, how they see the trends and changes, of course, introduce their activities and what exactly they're doing and how well entrenched they are in the market, where. But I think it'd be good to start with Refinitiv, with the overview about the market. Let's wait a minute until we have George online.
Tal Jorge is joining now. I sent him the link. He accessed through Google for some reason. So he'll be joining.
Okay, so Jorge. Okay. Makes more sense than George.
Yeah, in Spain.
I see. Jorge, how are you?
Hi. Thank you very much. Apologies for the connections on my side. I actually did try to connect like 2 minutes early.
Okay. No worries. We have you. That's most important. I'll ask Nir to cancel his screen share so you can share your presentation.
Perfect.
So again, for those of you who just joined, we're going to start with Jorge from Refinitiv. Jorge is the Market Development Director focused on wealth and EMEA in Refinitiv. And please, Jorge, introduce yourself and take it away.
Thank you very much. So basically, as you said, Jorge Tavio, I've been in the company for now 13 years. First Thomson Financial, then Thomson Reuters, and now Refinitiv, which is basically the new brand of the company after first being acquired by or in partnership with Blackstone from Thomson Reuters, and now we're throughout the year going to be part of the London Stock Exchange Group, right? So it's been quite a ride, but we're in very exciting times these days. I'm just wondering if I can't see the slides. I'm wondering if you can share the slides so I can talk you through the content that I have prepared for today.
Yeah, share. Jorge, you can choose to share your screen.
Oh, okay, then I'll do it on mine. Okay, thank you very much. Much easier.
Play with it and show exactly.
Thank you. So it's okay. Can you confirm you can see my screen?
Yes, perfect.
Thank you very much. So
yes, we can see.
What I was planning to talk to you today is, first of all, I want to give you an understanding of what we are, who Refinitiv is, right? I'm going to give you some trends that we see in industry, both industry and market trends, especially financial markets in recent changes, mainly flows that are happening in the market these days. A review of, from a regulatory standpoint, what we see in the regulatory landscape across Europe, Middle East, Africa, but mainly the European Commission. Then some of the challenges that we see in FinTechs, what's going well, what's going wrong, what needs room for improvement. And then we're going to be running you through what is our relationship with FinTechs, right? How do we help FinTechs, to capture the opportunity in a simpler and then more agile way, okay? So in terms of, for those of you who don't know us, right? Refinitiv, even though it's a brand new name, we come from having quite a vast heritage, right? So formally, in a second, our founding father, Paul Julius Reuters, started the business in 1858 when before 1858, when he was using carrier pigeons to communicate prices between different markets, right? And that's where our story started. But we continued from then, communicated from pigeons, we went into the undersea cable. And today, when you're trading US dollar to the GBP or the UK pound sterling, today it's still called a cable. Just for the record, it's still called a cable because we use the cable to communicate prices between different markets. In the 64, we started, producing what we call the Reuters Stockmaster, which is the first real-time communication of pricing across exchanges. In 1981, we probably delivered the first e-commerce platform, which is a Reuters dealing, which was a platform to be able to trade electronically between different parties at a global level. And on 2001, we released the enterprise platform, which is Reuters Market Data System, which is today, with its evolution into the enterprise platform, probably one of the most used platforms to distribute real-time data to financial institutions that trade in capital markets. It delivers approximately about 6 million updates per second, so you understand the volume of information that is going through our platform. And then in 2013, we leveraged the evolution of cloud to release what we call Electrum, which is our low latency platform. And last but not least, in 2016, we released our open data platform. But what is interesting for you, which is our history in Israel, we thought it would be good to give you some pointers of what has been our history in Israel, which is also extremely important. So first of all, our first Reuters editorial was in Israel, working in 1945. So we go back pretty much way back. In the 1970s, we transitioned from purely a Reuters editorial team to also start distributing news and also financial market data. And then in 1980, we launched the Reuters Monitor service in the Israel market, actually from the same offer that we operate today in Beale Street A. And then 1982, which is when that electronic platform hits the Israel market. So we have been working not only globally, but locally in the Israel market for a long time. We go way back. What do we do as a company? So the core of our strategy is we operate what we call an open platform, right? What I would say is that we connect what we say the buy side with the sell side, right? And this is a set of providers of content that can be exchanges, research providers, banks, central banks, and many more other sources. And we connect them with the consumers that also are financial institutions and sometimes themselves are both providers or consumers of this platform, right? So what are we? We are an open platform of data where there are a set of providers and a set of consumers, and they all connect seamlessly to make it easy to consume a wide array of market data. In the process, we aggregate, we normalize, and we distribute. So what do we see in the market these days, right? So in general, so on the left-hand side, I'm highlighting what we saw in markets up to COVID-19 hit financial markets. So we were seeing already shrinking equities and shrinking deposits. We're seeing the growing and emergence of ESG as a factor towards investments. Private equity were in growth. Real estate was growing. Structured products and derivatives were growing as wealth management institutions were trying to raise fees on a restrictive fees environment. And then funds and ETFs, which is the chart at the bottom, were actually, apart from the hiccup, probably related to the start of MiFID II, which was kind of a hiccup between 2017 and 2018, it actually picked up back again to a steep growth trend in 2019. No surprise, there's probably going to be a hiccup in 2020 as we look at the total net flows. Notice this is of our own source of data, which is a Lipper as a source of data. What I will highlight is that if we separate traditional fund management institutions managing mutual funds versus ETFs, which is predominantly traded in self-directed trade environments, or also what is now popularly known as robo-advisors, notice that the volume of ETF volume, which is all of the volume of robo-advisors, mostly based on ETF trading instruments, it's really just scratched the surface. So the volume of fund management flows that go in ETFs versus on the mutual funds is still extremely heavy on the mutual fund flows, right? Next, what I would like to talk to you about is when we look at these fund flows, we also monitor how they behave globally, right? And yes, we also monitor by asset class how they're flowing between asset classes and geographies. And I'm going to show you the difference of what we've seen in the last month, which includes past COVID-19, and then I'm going to be showing you what happened in the last week, so you can have a volume of the impact. So this is the total net flow of fund flow assets globally in the last month. And what you can see is that, there was a growing factor in the last month for $57 billion globally for bonds, money markets 28 billion, and 12 billion on decrease on the equity side, right? But you see this trend more or less happening only equity in Asia was really growing, with the rest of the assets was really going towards the bond flows. But what I would like to highlight is what has happened in the last week since coronavirus hit the market. So if we look at the same data on the right-hand side, but you look at only the last week, what you see, first of all, a massive amount of outflows on all of the asset classes, equity, mixed, and bonds, and obviously massive 120 billion outflows of bonds. And what you see across markets and regions is that the only market that's saving the day for Asia in equity. The truth is that there has been a monumental shift of assets to American money markets, which is a total net flow of $150 billion in just 1 week. Notice these figures are monthly, whilst these figures are weekly. So there is a substantial volume of assets, which is from one night to the day, so suddenly shifted into money markets in the North American market. So I just hope you understand the volume of impact that this will have over financial markets, but also the kind of services that our investors will be demanded, because this will also carry out yields. It will put away the whole market into it. So this is just to give you an understanding on what we see in terms of financial markets with the data we have available. I will not go into detail of showing you what has happened to equity and fixed income markets, but I hope you saw something that is a bit different, which is the net flows that are happening at a global level, right? And this is all our proprietary data coming out of our Lipper database, which is our flagship platform for fund collection, manufacturing, and distribution. So what is happening beyond there in terms of wealth management institutions? So we saw a myriad of trends. So first of all, the volume and variety and velocity of data is just going off the roof, as we see. We see use cases for unstructured data, and not only the collection and the distribution and normalization of data is just growing, right? We were seeing it going in all angles. From a regulatory standpoint at a European level, yes, it is true that MiFID II is probably at a more mature stage and no longer an urgency. PRIPS is perhaps one of those new kids on the block, which has to be addressed properly. UCITS is now in version 5. Apologies for missing the V there, but it's on a very mature level. And PSD2, from a regulatory standpoint, has only just landed. And the truth is that PSD2 is born already with just a payment services directive in mind. But what we see in the regulatory standpoint is we see the trends with PSD2, we see the trends with GDPR on data privacy. And what we see is that, unfortunately, we see that that regulation is born, and it's already born short to where the trend of the market is going, which is to use the use cases of open banking way beyond just payment services directives, crashing credit cards. What we see is that there is a growth of the usage of open banking technology way beyond these use cases into investment assets, pension funds, and even insurance products. In terms of disruptive technology, of course, there is digital, there is cloud, there is AI, denominating it machine learning, and then the distributed ledger technology. From my point of view, the one that has really changed the industry far beyond the rest yet is cloud, just because of the reduction of barriers to entry and what it allows in terms of volume analytics. AI, big data, all those trends are only capable after cloud arrives. In terms of trends and millennial influence, it is true that as we're estimated that about 10% of global assets under management will change hands in the next 5 years, which is a huge shift, right? So it is definitely, from a banking and current scenario, it is definitely what we see as a survivorship game, right? And then in terms of partnership and collaboration, what we see is the necessity of not reinventing the wheel, just focusing on what you're good at and just forgetting about the rest. In terms of regulatory environment, the main change that has happened in the market, or you skip the slide, was mainly the FinTech action plan that came out on March 18. And there was some very strong messages coming out of the European Commission when they launched that. I was actually a person there when it was all published, and we were all explained how, what was in mind of regulators when they were putting this activity in. So obviously in PSD2 and GDPR and open banking, nothing new, to be honest. We know those two regulations very well, nothing disruptive. In terms of the FinTech lab, it's just another way of them being able to promote knowledge and skill across the margin of new technologies. But I thought that the most interesting lessons learned were what their message was behind blockchain, cryptocurrency world, and crowdfunding. What they did say is that for the blockchain initiative, they have launched a EU blockchain observatory, right? It is a very carefully chosen word, and they emphasize that. The reason why they did it is because they fear actually regulating blockchain, because then that derives that they have responsibility of the behavior of blockchain. Hence, they acknowledge the fact that it is there and it exists, but they do not accept into taking the responsibility of regulating it themselves, which is something that, from my point of view, I'm not going to call it cheeky or smart, but it is, from my point of view, as much as they could afford to do in terms of risk and regulation. In terms of cryptocurrencies, all they really did beyond that is mainly confirm that cryptocurrencies are under the anti-money laundering regulations in the 4th directive. What they did say is that, regulations they did try to regulate more on the crowdfunding services. So they did acknowledge the trend in crowdfunding, and they did acknowledge that it is a service that is legitimate for regulation under their umbrella. And then last but not least, and I think it's a fundamental thing for digitalization, is their understanding that cross-border acceptance of e-identification and remote KYC process. They're actually saying that digital identification is as valid or more than normal identification when you go to a branch office, and that changes everything, right? Because banks have been surviving on branch office relationship with their clients, go and sign papers, and that's no longer necessary, right? It is acknowledged that a digital KYC process is as valid as a face-to-face KYC process, right? And that, from my point of view, is a very strong message from a digital banking perspective, right? So we go into the tech challenges that we see in the market. Obviously, for fintech, what we see is in a European market versus operating in markets like China or the US, there's a massive fragmentation in Europe. Regulatory, language, and culturally. It's very hard, and there's barriers to entry to many of the markets because of a regulatory and cultural and language perspective, right? And it's very hard to see dominant players operating across borders. There's risk supply chain, and there's customer risk, to understand and make sure your customers are not using you as a guinea pig to launder their process and proceeds. And then last but not least is scalability. How do you, within that fragmentation, within that supply chain risk, how do you make sure that you have the processes, the platform, and all of the services that you need in place to be able to hop from country to country to become scalable? And that's something that we see that is key for the success of fintechs. If we really release into the World Economic Conclusions of the FinTech evolution, I like to highlight this because I think that it's instrumental to understand the success and where there's area to improvements on fintechs. What I see in terms of where fintechs have succeeded is, I think that fintechs have definitely taken the lead in terms of shaping direction of innovation. That is something that I think that they have been definitely pioneers. I think that they have definitely succeeded in reshaping customer expectations, right? We already have our customers being the incumbent financial institutions, and I do acknowledge that my conversations with them come around the path of, well, robo-advisors haven't really taken a nudge on our assets under management, but they have definitely changed and shaped customer expectations. They have changed the perception of what good means and feels like. And that is something good of fintech, because they have changed what success means like and customer experience. On the negative side, of what needs to be improved is that hasn't been really a shift in assets as much as we have seen or perceived that fintechs were going to change, right? And they have failed to create like these new infrastructure and established financial services when we compare it with a vast amount of volume of assets and flows that are being captured by the incumbent banks, right? So where can we help, right? So in terms of where we can help, and I'm just going to take like 2 minutes to wrap this up because I acknowledge the fact that I started late, is that there's 3 parts of the value chain that we can help. Understanding the supply chain of a fintech is quintessential to understand where the risk is. The second one is, how do we automate processes, right? So that you're able to drive that scalability across the enterprise and operationalize globally. And then how do you put all of that data in the fingertips of your clients to create a better customer experience and comply with regulation? So we have 3 different services to help out with this, right? So the 3 services on the first side is an API called DataScope Select API. You can reach our local team in Israel if you would like to have a trial of this service. And basically this service is basically giving price and reference data for enterprise resource processing and the automation of these processes. And then also this data is used to report to client on their portfolios and performance. Then the second service that we have is WealthTech API, and that service is a database of politically exposed individuals, sanction lists, and bribery and corruption, so that you can screen your customers and your third parties, and you can make sure that you comply with regulation, but you limit your exposure and risk to third parties, right? And then the last one but not least is our digital wealth solutions, which is basically data that we give to the fintech so that you can impress your clients, so that you could use our data and our news to enhance your customer experience. I'm not going to go into detail of all of these, but just to summarize, DataScope Select is a universal platform to feed the heart of your fintech application and use it for ERP and reporting scenarios. In the digital wealth scenarios, you have our financial market news, our economic data that can be used to investor portals, right? And then the third one was WealthTech One API, which is the anti-money laundering screening and third-party corruption database, where you can understand you can research on and screen on politically exposed people, sanction lists, and bribery and corruption, both at a company and at an individual level, right? So just to summarize and wrap it up, as I said, as Refinitiv as a customer, what we do, we aggregate a vast volume of data, and we can help in the supply chain management analysis of anti-money laundering screening and bribery and corruption. We can automate your enterprise resource processing and management of data ingestion and distribution. And then the last one is help your customer experience and how to create more engagement with your customers. Thank you very much. This is my presentation. I know I overran a little bit. I'm just wondering if there's any questions.
That was fine. Jorge, thank you very much. It was very interesting, especially to see the remarkable shift that Corona made to the market in just a split of a second, how everything changed. If any of you have questions for Jorge or Refinitiv, you can use the group chat to have it, and Jorge will be happy to answer. Cool. Thank you very much, Jorge, for the presentation. If you can please unshare your screen so we can have the next presenter join us. So up next, we'll have Ari Engelhardt, VP Product from BondIT. He's going to share with us what they're doing in BondIT and how they see the changes and trends in the market. Ari, are you with us?
Hi, everybody. I'm here. Can you hear me?
Hi, Ari. Perfect. Yes. So okay. Here you can share your presentation now.
Excellent. Thank you. Okay. Hopefully you can see.
1 second. We'll tell you. So great. So we can see and remember, we really encourage you to use the chat to interact, to ask questions. This is the idea behind all this session today. So Ari, please take it away.
Great. Thank you, everybody. Thank you for having us. If your day was anything like mine, probably this is not your first Zoom meeting of the day. It might be your 20th. So we'll try to keep this moving, keep it interesting. But we do want to thank the folks at FinTech-Aviv for hosting this event. And thank you also, Jorge, for very enlightening opening comments. I'm not going to go through slides, actually. I'll give a bit of a company intro and overview, and then actually walk you through a quick demo of the BondIT platform. So at BondIT, we've built what we call the next generation tool for fixed income portfolio construction. And what that means is we power the entire portfolio construction process for portfolio managers and for financial advisors in wealth management, as I'm sure we have many folks on the line that this applies directly to. Jorge just mentioned the shift in customer expectations, meaning that clients expect to get service faster than ever. What we focus on is what we call the portfolio manager experience, or the PMX. And by doing so, we're able to streamline the workflow of portfolio managers and advisors and allow them to, in turn, service clients much faster. What it means is that we let advisors build intelligent portfolios the way that they truly think about fixed income. That means putting to work strategies, objectives, and constraints that are specific for both your client needs and also the market conditions. Of course, a lot speaking about the current market conditions. It means putting on-demand reporting and analytics at your fingertips. And it also means allowing teams to share strategic data that is critical to the investment decisions. Instead of passing spreadsheets back and forth, we allow you to bake that critical proprietary data into the portfolio construction process. And all of that sophistication is included, yet our clients describe BondIT as one of the easiest platforms they work in throughout the day. For folks who are more on the tech side of the FinTech division, we're built on a scalable microservices architecture with a full set of APIs to connect to platforms. And a quick note just about the company before we jump into the demo. We're based in Herzliya with an office in New York. We're made up of about 35 data scientists, engineers, and fixed income professionals. Privately owned, have significant investors and strategic partners around the world. So what I'll walk through now is a sample journey of an advisor working with a client in the BondIT platform. So hopefully now you can see the dashboard. And you can imagine an advisor sitting with their client directly. This is all designed to be real-time, fast, iterative process. So you might be sitting at a coffee shop with your client on your iPad or in the office on a laptop. What you see here is the overall dashboard, the set of portfolios, proposals that I might be working through throughout my day. And what I want to walk through now is what it looks like to actually create a portfolio leveraging all of the data and all the connectivity that I mentioned. So we're going to jump into what we call the generate process, which leverages data science, AI, machine learning, and pulls together all the data that is strategic to a client. So first, we'll put in a portfolio name. We'll call this the WealthTech demo portfolio. We can put in $10 million, let's say, as an average high net worth individual that might be serviced. I can specify the percentage min-maxes for weightings for the portfolio, and this automatically computes then, of course, the min-max number of bonds, which also calls into place, of course, for those who are very familiar with the fixed income market, the minimum denominations and increments and other complexities that make this actually a rather hairy and complex non-linear optimization problem. But we'll leave the math and science behind for a moment and focus more about the user experience. Next, I have a universe concept, which means that basically I can connect to all the different systems I might use throughout the day. I can leverage my company's watch lists, hot bond lists coming from my research desk, for example. Jorge also mentioned the popular trend of ESG investing. So as you can see here, the third universe I have available is ESG. But basically the sky's the limit, and each client configures these lists the way that they need to in order to service their end user clients. For the purposes here, we'll stick with the US universe. We heard from Jorge as well about the shift towards US investment instruments. What am I trying to accomplish? Well, I have many different choices, but for today, let's talk about maximizing yield, and that will become the objective that carries throughout the process. Down below here, I have portfolio targets. Now, don't let the simplicity fool you here. Many construction tools are essentially filters that let you look for bonds of certain attributes and kind of construct one by one, a lot of trial and error. What this allows you to do is actually take a top-down approach and actually dictate the end result that you want your portfolio to look like. So in this case, I can target a portfolio average between A- and AAA. I can target a portfolio average duration, let's say, between 4 and 5. And this will enter into the optimization process to ensure that that's what my end portfolio will look like. And as I'm working, everything I enter is being summarized. But of course, maybe I want to have even more control over the portfolio. I could go ahead and generate the portfolio at that point. But let's take a quick look at the other power that's available. And I'll skip through a lot of this, but I think it's important to look at a few of them. So let's say, for example, I want to eliminate my portfolio to mostly investment grade bonds. I'll simply switch off those that are not relevant to me. For any attribute throughout this entire process, I can specify a minimum and maximum weighting. So what we have is a combination of filtering and also setting the constraints at the portfolio level. So really powerful, yet a really simple and easy to use user interface. I can limit my issuer max. So let's say I don't want to be concentrated too much in any one issuer. Let's limit that to 5%. Bond types. So let's say we're focusing only on corporates, although we can go for government or munis as well. Currencies, countries, and on and on. Really, it's quite configurable for the client's workflow. Let's look for a second at sectors, because that's obviously a common exposure to control. In this case, let's get a little bit of diversification going and say I want any one sector to be no more than 25% of the portfolio. And this will give me some diversification. So I can continue onwards, but for the sake of time, let's actually go ahead and generate with the parameters that we've entered. As that's running, I can look at my dashboard, try to figure out my next most important priority, and you can see it's already completed in a matter of a couple seconds. And this dramatically reduces the time it takes to create a portfolio that meets criteria and objectives. In many cases, it takes hours. In some cases, it can take days. But here we can iterate quite quickly through it. And as I'm sitting with my client, I can simply pop open the proposed portfolio, and we have access to a wide array of statistics and analytics that can help give insight into the actual proposal. Again, for the purpose of focusing on a short demo here, one immediate insight I can see is that the energy sector is contributing rather high amount to a value at risk. And value at risk, of course, is a very important metric to be able to manage the expected loss in a portfolio. So I can actually really quickly go and rebalance the portfolio in order to lower my risk exposure to energy. I can see the entire breakdown. I see the line items themselves, of course, that make up this portfolio. I can drill into any given bond and see the price history, spreads, a whole host of data points that are critical to my decision-making process. And let's say, for the sake of this example, that I do want to go and rebalance out that energy sector. I can simply go and it'll pre-populate all of the criteria, so I don't need to re-enter anything. I'll just give it a new name. We can call this the WealthTech demo reduced energy. I will simply go and adjust the energy sector down to, let's say, bump it down to 5%. Generate, and off we go, and we have another iteration of the proposal right at the client's fingertips. And what you can see, as soon as it generates, you can compare them side by side, and you can show the client the exact impact of the updated portfolio. There's many other workflows, but our guiding principles as a product are for everything to be flexible, We can tailor-made any workflow on portfolio management, whether it's for wealth managers, for portfolio managers in an asset management context. And overall, we simplify the portfolio management process.
Perfect, Ari. That's
Thank you.
very interesting. Actually, we have one question from Gilad Bar-Ilan. Can the portfolio be executed directly from BondIT?
Yeah, great question. So BondIT, as I mentioned before, we focus on connectivity with other systems. So both on the input side to get data and proprietary data, as well as on the downstream side, so we can send transactions to execution systems, to compliance systems, rules engines, and other such downstream systems.
Okay, great. And another thing that I think will be interesting, have you witnessed any specific commodities or different bonds that are being relinquished? Like people are moving out of these because of the corona, because of the shift that the market has seen in the past 2-3 weeks.
Yeah, interesting question. We actually don't, for privacy reasons, we don't measure that type of activity. We work with each organization to allow them the configuration and the ability to articulate their visions of the marketplace. So we don't perform that analytics, but it would be interesting.
Okay, wonderful. Okay, Ari, thank you very much. If you have any more questions for Ari, sorry, please make sure to use the chat. Thank you very much for the time, Ari Grenholm from BondIT.
Great, thank you, everybody.
If you can take off your screen sharing. Next, we have Ben Fried. Ben Fried is the CEO and co-founder of Cred. Cred is focused mostly on the US market. Ben, are you with us?
I am. Can you hear me?
Yes, perfect. Okay, wonderful. So if you can share also your screen and take it away.
Perfect. Okay, so thanks first of all for having us on this. I hope everyone that's listening in is doing well, staying healthy, and we'll get through this together. So Cred is a wealth management company. Obviously, we are based in Tel Aviv. Our focus is actually slightly different than, let's call it, classic wealth management companies. We help banks and wealth managers acquire clients and assets by helping them serve a high level of personalization to their entire client base, essentially scaling up the level of personalization that they can provide. So I'll go through a quick, a few quick slides just to give an idea of the scope and why we're doing what we're doing, and then jump over into a demo. Obviously, happy to take any questions after that. So a little bit about us. We have some key partners. We actually started off operating in Europe, BNP Paribas and Barclays. Barclays are one of our investors. Recently shifted over the last 6 months or so to the US. Quite a strong team with a lot of experience in the wealth management industry, mostly in the US. A lot of operations in both continents. So why are we personalizing? What is the problem that exists in the market today? So if you really look at, let's call it retail wealth management. So if you have clients that with less than 5 million or so in assets as a wealth manager, really what you're doing is there's a very strong onboarding process. The first initial touch point with the client is very personalized. And then from there it's really what we call five sizes fits all, right? So generally you'll onboard a client, you'll implement them into an investment portfolio based on their risk profile. You might have 5 or 6 risk profiles across your firm, and every client will be put into one of those risk profiles, portfolio managed accordingly. The products within the portfolios are also one size fits all or 5 size fits all. The engagement is very generalized or, again, mass customized. And so what you end up with is after the initial onboarding process, on an ongoing basis, advisors are struggling to explain to their clients what kind of value they're adding on a regular basis for them uniquely. You know, asset management has ceased to become a barrier for most advisors, for passive portfolios, asset management is not the core piece of what they do today. And really their value proposition, if you look at the US market, and this is spreading throughout Europe and the rest of the world as well, is that they're no longer investment managers, they're financial advisors. And they're helping their clients reach their end goals in the most effective way possible. And so that's what we're here to help them do. As you go and attract clients, you have to differentiate, you have to stand out, and you have to use a little bit more data behind the scenes. So what we see today is that their operational capability is out there, but acquiring clients is a whole separate question, and that's what we're here to solve. So Cred's out there to help advisors, again, use data, use personalization to acquire clients, help bring new clients on board, serve clients at scale on an ongoing basis, and then continue expanding that client relationship over time. Just a quick scenario of what that might look like, or why, again, the challenge that an advisor has in terms of serving personalization. So today, again, the onboarding process, risk determination, financial planning, very in-depth, very personalized. End result is that portfolio that we mentioned. Now let's replace that client with 100, 120, 150 clients, which is very standard in the industry. And then you have a client that goes and decides to quit being a banker and switch positions over to becoming a painter, which in today's environment is probably not advised. Another client, for example, had a kid. Another client's out there and they just went and purchased a house. So this one wealth manager has to sit there making sure to keep track in real time of everything that's going on in each client's lives. Obviously, this is something that has to happen on an ongoing basis. And that's a very difficult thing to do. So obviously, what we help them do is identify all of these life events and then take action. And the steps are, like I just mentioned, let's learn, first of all. How is each client different? You can't identify or you can't define each client just through a risk profile. Let's really find out what their life looks like, what is unique about them in terms of their life events, the different things that are happening for them. And then critically, let's act on it, right? Let's make sure that we can identify these events and service that client effectively on a very personalized level at scale, right? You have to make sure that the advisor is able to do this across their entire client base. They only have so many hours in the day. And then no less critically, let's also tell that client about it. If you go to someone and you say, I've saved you 4 basis points, for most people that means nothing. But if you go and you can say, I've improved your financial scenario in 2040, which is your retirement date, by $100,000, well, that's very powerful. Obviously, the last piece is analytics, and we'll look at that in the demo momentarily. So let me flip over here.
Ben, when you speak, can you speak closer to the mic?
Yeah, sure. Is this better now?
That's better, yeah. It was okay, but this is better.
Okay, perfect. I'll speak up a little bit. Okay, so quick view of our platform. I'll actually start off by diving into a specific client. So what we have here, this is a platform for investment advisors. It can also be tailored for banks. And this investment advisor is looking at a specific client, Angelina, who has a profile. This profile might include, let's say, general information about her risk profile, her target date. Obviously, in this case, it's one single portfolio just for the case of simplicity. And what we're doing is we're building a digital profile of Angelina where we can track her in real time on an ongoing basis through her accounts. So this is on a permission basis, right? We're looking at her credit card transactions, account activity, et cetera, so we can keep on tracking what is going on in her life. Now today, if Angelina came to an investment advisor with a certain risk profile, she would have a model investment portfolio, like what we said. They might have 5 across the firm. That portfolio in this case is made up of ETFs, but that can be shifted based on each model. And that's essentially the extent of what the advisor will offer her in the portfolio. So what we do is we use factor modeling, first of all, to tweak that portfolio to account for Angelina more effectively. In this case, we find out that she has residential real estate that she owns based out of Florida worth $300,000. She might also have Apple stock worth a certain amount of dollars. And so we're using factor modeling in order to shift her portfolio, to personalize her portfolio and account for her existing assets for her income, the risk that she has there, and her personal preferences if she has any. In this case, her personal preferences relate to her values, fields of interest, and favorite companies. And you can actually see some more information about that over here in terms of her preferences and her profile. Obviously, the further or the deeper you dig down into who she is, and she might have some held away assets as well that this advisor is not managing directly, you can add that holistically into this model portfolio. And what we're doing is we're calculating the different correlations or the different pieces of her financial life, bringing that into one centralized location and managing that more effectively at a personal level. So by bringing those assets over, here's how we can improve her financial scenario. She can add new assets as well. This is powered by Plaid, so you can go and connect into any financial institution and bring over any additional data. And critically, when we are showing the personalized portfolio, the increase here is in dollar terms. So we can go to Angelina and explain to her, by personalizing the portfolio, by reducing the risk and looking at the different correlations, reducing the fees, et cetera, in your portfolio, we have actually improved your scenario throughout your investment horizon. So that's kind of within the investment portfolio. And then alongside that, we're also looking at ongoing events. So we can identify that she received a raise, look at a mortgage, et cetera, et cetera. And everything that is going on in her life has an action attached to it. So that's for an individual client, but this really becomes powerful when you zoom out to the advisor's entire book of business, where they might have 150, 100, whatever the case might be, a large amount of clients. And they can now identify all these different actions on an ongoing basis and use a preset rule to take care of this at scale. So they see that for clients that, let's say, for example, switch jobs, well, what do I want to do about that? And these are obviously customizable, but in this case, you have exposure to Google because you started working there as a client, as an employee. Let me now decorrelate your portfolio. Let me look at your 401k rollover. And the action the advisor wants to take here is set up a calendar link so we can discuss bringing more assets on board. Obviously, again, these are customizable. There is a wide range of different events and triggers that we help utilize. Similarly, for tax, held away assets, et cetera, et cetera. So all of these different things that advisor can go identify different held away assets that are kind of ripe for the picking and help bring those assets on board. We have an additional quick piece that I'll show over here. It's an analytics platform. I'm flipping over here, and this is bank facing or HQ facing. This is a relatively new rollout, and we call this analytics at acquisition. And what we're doing is we're looking at that personalized data. This is essentially the exhaust almost from that personalized data that we have from each client. And what we're doing is we're identifying what each client looked like on the day that they became a wealth management client. I want to understand how I can go attract more clients. I want to see what my client base looked like right when they became clients. What was their life stage? What was their average portfolio size? What was their average engagement in terms of, this is for a bank, for example. Where do they live, et cetera. And you can go and you might say, I want to see a younger client base, let's say 25 to 40 instead of the broader client base. Apply filters, understand how a recent raise might have affected your likelihood to come on board, et cetera, et cetera. So the data here is pretty powerful in terms of the amount of drill down that you can go and do. And that feeds right back into the advisor platform where they now are fed with prospects or actions that they can take on a personalized level. Really being able to go and serve a much higher level of personalization to each client and scale their AUM.
Beautiful, Ben. Question here: do you have any thoughts or things that you saw a bit like shifts that you saw during the let's say the last 2-3 weeks from Corona, from the way that your clients are using the platform, the way that they analyzing risk in general?
Yeah, so I'll start by saying that it's a very different environment, obviously. The purpose of the platform initially was to actually protect against times like these. So if you're currently an airline pilot or an executive at an airline or working at a bank or whatever the case may be, and you have exposure to those different places through both your income, which in some cases now might go away, through stock options, et cetera, and your portfolio has a large level of exposure to those industries, you're going to get killed, across the board. You're completely in trouble. And so one of the problems that we're looking to tackle or help tackle is, as a wealth manager, if you've taken action beforehand, if you prepared for this event, your clients will be much better off. They're going to make sure that they don't get hit from too many different directions. There are additional pieces that we're now implementing as well, like you're saying, as people are now worried about losing their jobs, as people might have a reduction in salary, et cetera, as the markets might be shifting in terms of the expected growth of assets. Those are different topics that we're getting from advisors and going ahead and implementing different reactionary capabilities in the platform.
Okay, got it. Okay, Ben, thank you very much for the presentation and sharing your input with us. That was Ben Fried, CEO and co-founder of Cred. Up next, we have Yaron Gallagher, co-founder and CEO of Einer First Market Forecasting. Yaron, are you with us?
Yes, I'm here. Hi.
Hi, Yaron. Great to have you. In a second, Nir will stop the screen share, and you can upload you can share your presentation.
Perfect. Just a moment.
Perfect. Thank you.
Oh, okay. So good evening. Quite unique event, I would say, and I hope everyone here is feeling well. I will start with a quick introduction, and later on during the presentation, we will be able to see some fresh examples, even some examples from today. I know first, we are AI wealth tech company. Our main solution is a predictive algorithm that generates daily predictions for the financial markets and identifies the most promising investment opportunities. We are utilizing deep learning, artificial neural networks to predict the financial markets. Our predictive algorithm is generating daily forecasts for over 10,500 assets from different asset classes, stocks, ETFs, commodities, futures, currencies, interest rates, and also world indices with daily forecasts for different time frames from the short term to the mid-term and also to the long term. This is a global solution. We are covering over 50 global stock exchanges, including the stock exchanges in the US, Canada, Mexico, Europe, Israel, Hong Kong, China, Taiwan, and also Singapore and Japan. The predictive algorithm was developed by Dr. Lipa Roitman from the Weizmann Institute of Science, one of the leading experts in the field of deep learning, artificial neural networks, and he is leading our R&D team that's based on PhDs, AI and machine learning experts. We are working with math professor from Tel Aviv University, as well as employees with the background of data science, math, statistics, and IDF veterans, specifically from the intelligence unit. The solution that you're about to see has received several awards, including the last recent award is from the Geneva WealthTech Forum just a few months ago. Basically, we are providing two services to our clients. We are working mainly with banks, hedge funds, family offices, and asset management firms from all around the world that utilizing our predictive algorithm in order to identify opportunities in the market, in order to support their investment decision, or in order to track their own portfolio. So the first use case is to utilize the predictive algorithm as a decision supporting tool that identifying opportunities in the market on a daily basis. The second use case is to utilize the predictive algorithm in order to structure a AI-powered investment product. It could be a smart beta product or even an hedge fund or a mutual fund. In order to generate the prediction, our predictive algorithm is collecting data that's coming from the entire financial market, We are adding the daily data to our database. We are managing database with historical data. And basically around the clock, the predictive algorithm is learning from the data that's coming all the time from the market, also from the, what happened in the past, and also from the combined data. And during this learning process, the algorithm is identifying the patterns in the market today and generating the forecast for the next future, from the near future, from for example, the next 3 days, the next 7 days, the next 2 weeks, and also to the midterm and the long term. Now, another input that the algorithm is utilizing, the algorithm is taking into account the past predictions. As a self-learning algorithm, the algorithm is learning from the past successes and also failures. And this is another important data that we are utilizing. Basically, the algorithm is building every day the complex network that exists in the financial market, the hidden correlation sets between the thousands, between the different assets in the market. And by utilizing this complex, or by constructing this complex network, the algorithm is building and generating the forecast on a daily basis. We are combining different AI approaches into one machine learning algorithm. We are utilizing artificial neural networks, we are utilizing deep learning. And the most interesting thing about this algorithm is that each forecast comes with confidence level. We call it predictability. In financial markets, there are assets that are predictable and there are assets that are not predictable. And by using the algorithm, it's possible to focus and to separate the most predictable assets from the assets that are unpredictable. And this is the basic principle that, or the most important principle that standing behind the I know first predictive algorithm. We are always separating and focusing on the most predictable assets. And from this investment universe, we are identifying the most promising investment opportunities. Every day, the algorithm is generating the forecast in the form of an heat map. We can see it on the left side of the screen. The green cells represent assets with positive forecast. The red cells represent assets with negative forecast. And every day, the algorithm is generating this heat map based on two main indicators. The first indicator is the signal. It represents the expected return of each specific asset based on the last closing price. And we are utilizing this indicator in order to create the ranking that we see right here. So the assets that are located at the top part of this heat map are the assets with the highest expected return. And the ones that are located at the bottom are the ones that the user should short sell. It's important to mention this is a long short algorithm. So it's possible to identify opportunities for long positions and also opportunities for short sell. The second indicator that we see right here, called the predictability. This is the confidence level of each forecast. It varies between -1 and 1. This is Pearson correlation quality measure. The higher it gets, it means that the asset is predictable. And it's super important to focus on, or to take into account the two indicators that we see here. First of all, to take into account the predictability, to focus on the most predictable assets, and also to combine it with the signal, with the second indicator, with the actual prediction. It could be positive prediction or negative prediction. Now, let's see a few examples from the recent weeks. We can see the 14 days forecast that the predictive algorithm was generating on 26th of February. We can see that back then, the algorithm had quite negative forecast for the S&P index. We can see it right here. And we can see here the assets that the algorithm picked as the best assets for short sell, for short position. And on the right side of the screen, we can see the performance of those forecasts exactly after 14 days. 14 days after the forecast. We can compare the performance of those stocks versus the benchmark versus the S&P. Another 14 days forecast with negative forecast for the S&P and 10 stocks to sell. Another interesting indicator that we are monitoring is actually the VIX and other volatility indices. We are monitoring more than 12 different volatility indices from all around the globe. And we can see that around February 21, we started to see a positive signal for the weeks as well. Now, here we can see an additional example of of predictions for the VIX. Here we can see that the VIX was already on the top out of the volatility indices heat map, and we all know, or we all can experience the volatility in the market recently. I understand that there is some question. I'm going to answer it, to take it in one slide. Yeah, of course, it's possible to utilize the predictive algorithm also in order to identify opportunities for long position, in order to conduct the stock picking process by using the algorithm. And we can see here an example from today. Today, the top stock pick of the algorithm for the short term, the algorithm picked Micron Technology as the best stock for today, I would say. And we can see the performance of this stock on the screenshot below. Now, okay, to answer the question that I see on the chat, yeah, I totally agree. We have never. Thank you for the question. We are doing actually. We are also managing money by utilizing this predictive algorithm. We are doing both. On one end, we are offering it as a decision supporting tool, and on the other end, we are also partnering with different institutional clients from all over the world. That and we together we are managing money by utilizing this predictive algorithm. So we basically we are doing both.
Okay, on another question here that you have.
Yeah, please.
Is what is the success ratio of predictions over time?
Okay, so it depends on the time frame that we are trying to predict. In general, the longer, I mean, if we comparing the 1 day forecast with the 7 days forecast, 7 days is going to be much more accurate in terms of each ratio. Another factor that affects the hit ratio or the success rate is also the market that we are focusing on. There are some markets around the globe that are more predictable than others. Our predictive algorithm is a global one, so on every day or every period, we can identify the most predictable markets around the globe. So it's quite depend on the region that we are trying to predict. In general, the US market is one of the best markets in terms of the predictability. Another interesting market is the Bovespa, the Brazilian one. We can see here an example of prediction for the Bovespa. As said, this is a global predictive algorithm. We are generating every day a daily forecast for over 50 global stock exchanges. This is, for example from China, Shenzhen or Shanghai. And we can always focus on specific sector around the globe. For example, this is an example of the tech sector in the US. I can say that the most predictable markets or the most interesting markets right now are the US, the Brazilian one, and also the Japanese one. Those are the top 3 in terms of the predictability right now.
Still with the coronavirus all around. These are the two top predictive ones.
You know, predictability is also, you know, it's the ability to predict. It might be predictable, but the forecast might be negative for those markets.
Yeah, of course.
So it doesn't mean that you should buy now stocks for, you know, for the next week, but in general, those markets are the most predictable ones right now. Regarding the market behavior, we can see some volatility. I mean, the volatility is here to stay. You know, the market is positive today. However, it doesn't mean that the coronavirus crisis is over. However, for the long term, we're starting to see some interesting opportunities. But for the short term, we're going to continue to experience the volatility that we see in the market.
Wonderful. Okay, Yaron, thank you very much. I see there are more questions. You can definitely take them in the chat because we have some more companies we want to share. Thank you very much. That was Yaron Golger, co-founder and CEO of Ino First's Market Forecasting. Thank you for taking the time and joining us.
Thank you very much.
Up next, we have Gil Shapira. Gil is the VP Business Development in TeleMessage. Gil, are you with us?
Sorry, yes, I'm here with you, and I am attempting to present.
Perfect.
So you need to stop sharing so I can start.
Yeah, here, try now.
Okay, great. Okay, I hope everyone sees my slides, and unlike some of the previous presentation, we're more of a working tool for this Corona age. So in my presentation, I'm going to explain a bit about the market, the new world we are suddenly forced to live in, and then some solutions that are practical for wealth managers and other regulated firms. So again, we have been probably experiencing it for over 2 weeks, I guess. In some areas, it's already lasting a few months, and we think it's not going to be short. Even after this pandemic is going to end this first wave, it might reoccur, and most probably the impact will last, and the way that we are working is going to change. This is something that will be with us for a long while. I guess you all know that this is, of course, also hitting a lot of like trading firms. So people with coronavirus were found almost everywhere in trading floors, and even the regulators, FCA, SEC, FINRA, are urging and encouraging firms to send their employees to work from home. Now, all this is happening, of course, in a great market where everything is declined, and this makes it not so easy for traders, wealth managers, and private bankers that are forced to work from home to be in touch with their clients, sometimes high net worth individuals that are like seeing all their investments, seeking for advice, seeking to reach out. And now this trader needs to do it from home where he's less connected. Most probably, this is done over mobile channels because that's the way that you're being reached from home. And in the past, we know that after mobile channels were used, it got some financial firms to pay hefty fines. Here you see some samples from Deutsche Bank about some traders coordinating Libor rates, and then some wealth managers giving advice to customers without any mobile oversight of these communications. On the other hand, there is a real need and a real urgency, both from employees to start using these mobile channels for engaging your customers or their customers. And also there is the request from customers to be contacted and to be able to reach out to their wealth managers and bankers through these new channels. And now that everyone is at home, we think it's the time to embrace this change and not start like telling your employees that they still can't communicate over WhatsApp. And what TeleMessage does is that we enable you to do it remotely. And also we're going to offer you to use it for free, because it's something that will really help you and make you more innovative and reachable, and will allow your employees to use mobile from home and from desktop and still be compliant with regulations. The way, okay, some statistic about the markets. Again, of course, all regulated companies are archiving and monitoring many other channels, but text messaging and mobile communication and social media is hardly monitored and captured. And also in the recent year, it was a big area where regulators were mandating firms to start monitoring it. A lot of fines, a lot of warnings. So I think if you're a wealth manager, most worldwide regulators are already mandating you to capture and archive these communications. So in the next few slides, we're going to show you how you can be innovative in these like strange times, and how you can use it to maybe change your work habits, but actually improve your engagements with customers and partners by being proactive and allowing your employees to use mobile engagement directly from their mobile devices. TeleMessage has 4 products that allow you to capture mobile communication and keep using your mobile for engaging customers. One of them is through integrations with certain mobile carriers like Telefonica O2, AT&T, Verizon, where we can get all the communication directly from the operator network. And then the employee, you simply tell him, yeah, now you can use your mobile, and all his communication is captured and reaches the firm systems. Another one is the Android Archiver, where we have an agent for Android devices that simply listens to all the calls and chats and captures them. So the employee can still use his Android phone with his native text messaging client, or just dial people, and everything is recorded. We also have a tool for BYOD devices, allowing companies to give a second number for their employees. And now if you have employees at home, you just provide them with an app that has a real mobile number, and they can use it to text and call. And today, the hottest product is our WhatsApp Archiver, allowing you to do WhatsApp communication with customers. And I'm going to be talking a bit about that, because this is something that we see a lot of interest in. And again, all these WhatsApp engagements are fully compliant, and you meet all the FCA, FINRA, MiFID II regulations. We have 2 ways to enable WhatsApp communication in a compliant manner. One of them is that we have an app that you install. We take the regular WhatsApp application, we wrap it with a certain wrapper, which allows us to capture all communication and send it to the firms, to the financial firms archive or other monitoring and surveillance platforms. We have another product that does not require you to install any app, but has a limitation that it cannot record the calls. So the previous version records WhatsApp chats and WhatsApp calls, and then you can transcribe them or convert them into trades, etc. This one only captures the chats and textual and image communication. It's done by simply scanning a QR code on the TeleMessage website. Then it allows us to open a parallel session to what you're doing on your mobile, capture all communication, and send it to the company archive. We can do it for the regular WhatsApp. We can also do it for WhatsApp Business. And what's nice is that we can also do it for employee private BYOD devices. So you can have 2 WhatsApp instances. The employee can simply chat and text natively We can, of course, have features that allow us to add disclaimers and other functionality. He can call people, he can exchange text, images, audio clips, whatever, and this gets into the company archive. What's nicer is that we already have integrations with over 20 archiving and compliance vendors that are enabling surveillance, monitoring, and other capabilities for all this mobile communication. So you equip your employees with these mobile tools so they can chat with customers, and you get all the information in the cloud or on-prem in any of these archiving vendors that or surveillance vendors that you might be using. Here are a few samples of how it looks in some of these archiving platforms. So this is an example from Bloomberg Vault. You can get all your WhatsApp chats. You can search through those. You can set up cases. You can run your inspections. This is a Relativity. It's a tool that also has automatic surveillance and AI capabilities. And again, you can get it with chats and other capabilities. This is another sample from Proofpoint, where you can see communication maps. You can set up different triggers and rules and see all WhatsApp engagements, or run it through some logic that does activities with those. The business model is that there is a setup fee and a cost per employee, but what's great is that during this Corona period, we're giving it till the end of April free for all new customers. So you can have up to 100 new users of the WhatsApp archiver for your employees at home that are affected. And of course, we are certain that you'll see how great it is and you're gonna keep using it. So besides the partners, we already have a lot of trials and a lot of paying customers. We have NDA, so I cannot really show you all these names, but it's already widely used with many tier 1 banks and financial institutions. Just to summarize, again, we're offering it free because we know that many of you wealth managers and traders and bankers are affected from it. So just feel free to reach out to us and we'll equip your employees. We hope that you'll, of course, use it also beyond April, but if all is done and gone by then you're just going to enjoy better service and better reachability for all your teams from mobile, from desktop, and from the web.
Wonderful, Gil.
Thank
you
all
very much. This was very, very interesting, and I really, we would like to thank you for providing this amazing value proposition for FinTech-Aviv members. So thank you very much, Gil, for the time and showing us about TeleMessage and how you really coping with this unique situation. So that was Gil Shafira, VP Business Development at TeleMessage. Thank you very much. Up next is our final presenter. We have Liran Christine. He's VP Product and Business Development from Fincom. Liran, are you with us? Liran?
I'm here. Hi, Tal.
Hi, Liran. How are you?
Good. Can you hear me well?
Yes, perfect. We can
okay, so
you can share your screen.
Yeah.
And take it away.
Okay. It's on?
Yes, we can see it.
Great. So, as Tal said, we're Fincom. We're an Israeli fintech, and it was nice seeing Jorge from Refinitiv at the beginning because actually we're from the same market. But as an Israeli fintech, we're coming to change the market. So the world of compliance. So compliance becomes strict and really the burden becomes heavier year by year. And if you are not with 200 people on your compliance team doing a lot of manual work, so you really need to look for new technologies to make compliance possible and affordable. And that's exactly what we're coming to change, and that's our message. So we have developed a very unique technology that's using phonetics. So phonetics, that's the mathematical representation of names. It's not new, it's over 100 years old. But what they've managed to do until now is to give a single mathematical representation for each name of writing, each way of writing a name. Our breakthrough is that we've managed to create a single mathematical value for the way you pronunciate a name. So it doesn't matter how you write a name or in which language it's written, it's translated into the same phonetic mathematical code on our side. And since it's mathematics and not in the world of characters and words anymore, so we can really incorporate machine learning and AI, not just say that we're doing it, but actually do it. And eventually what we achieve is entry matching technology that can match entries between different databases with great accuracy and very minimal false positives. So that's the relevant and main use cases. So we know how to search and match names. And again, doesn't matter how it's written, spelling mistakes, variations, transliterations, original languages, we will always find the names and we will have almost no false positives. So first thing where it's very crucial, and as I said, Refinitiv, so it's around the same area. That's the AML sanction screening, sanction and PEP screening. So the data might come from Refinitiv, they might come from Dow Jones, but the search technology, it's what matters, because you can buy data, but you can't create technology to search the data. And most solutions out there are really outdated and they are facing the problem of the short blanket. So if you want to be very effective and not to miss anything, so you have a lower threshold and then you have a lot of false positives. And as I said, you need 200 people doing manual work to resolve it. And if you want to be very efficient and very low on false positives, so you set the threshold high and then you are missing some results. So that's the current world of AML, and we're coming to change it with our sanction screening solution. Here you can see our onboarding and ongoing architecture. What's interesting about it is that unlike everyone else who is doing whitelisting, and on the next slide we'll see that many banks lately got hit with huge fines because they were whitelisting and then something changes on the list side and you're missing this data. So we have a mechanism called persistence. So with persistence, once we onboard someone, if there are any flags, he is going to compliance. Once compliance will approve him, so he will go into the ongoing database, which will be checked every time there's a change on the lists, and we will save the approval. So you won't see it again unless there's a change on the list. So we take a snapshot of the approval. So you are not whitelisting him. If there's a change, you will get him, but then you're not seeing him every day if there is no change. That's what I've said. Market failures, that's around ongoing monitoring. It's a huge issue lately. You can see the numbers, you can read about it. Next, same core technology, same phonetic engine, and on top, as I said, machine learning and artificial intelligence. So we're doing name matching. Name matching, it sounds very simple. It's very hard. What's very understandable and very simple to the human eye, it's very hard to algorithm or a computer to understand that this name and this name are the same. So where it's needed. So first of all, COP, confirmation of payee. That's the new law in the UK coming into effect next week. And then when you're sending money, you have to verify the name on the transaction against the receiving bank account. Name matching, so that's the equivalent on EU and US markets, where as the receiving bank, when I receive a transaction, when I receive funds, I need to make sure that they are addressed to the right person, otherwise I have to send it back. So again, that's name matching, taking the name from SWIFT or any other method of transaction, taking the name and comparing it to the name on the other side. In this case, that's just cents per verification, and it's very, very, we always say that that's your insurance policy. Adverse media, when you're doing CDD, EDD, a part of the KYC and on an ongoing KYC, you need to perform adverse media. Today, the biggest problem with adverse media, that's the noise, the white noise, the false positives. You're searching for a name and you're getting something like Google search. 100,000 results, 20,000 results, 2,000 results, 280 results. It's too much for a compliance officer to go over. And again, using our technology, we've managed to achieve 100% accuracy with almost no false positives. And the bottom line is, again, reduction of costs, both direct costs and indirect costs of human sources or positives. Last, I don't know how much time is left, but very interestingly, since we're not saving actual names, but only phonetic codes, that phonetic codes are irreversible and they are not considered PII, so we can search anonymously without breaking any privacy rule. So we know how to create data quality models such as the single view of a customer, where we know how to look for a customer across different databases, be it on a company level, group level, or even industry level, like we're doing in the gaming industry. So we know how to find the same person across different accounts, silos, branches, companies, and to create a single view, and that's without breaking any privacy laws anywhere in the world. And actually, that's the only technology that can support single customer view across industry or group level. That's it. We're working with, you can see some of the names, partnerships, clients. We're working in the financial industries, the gaming industry, high risk industry, insurance, money management, wealth management, and of course with regulators, governments, and Homeland Security, which is a whole different thing, but same technology, as I said, has many, many use cases. That's it. Thank you.
Thank you very much, Liran. This was very, very interesting. Thank you for the time and sharing the information about Fincom. So that was Liran Crispin, VP Product and Business Development at Fincom. I think it's a good time to thank you all for participating, taking part of this, really the first time that we're doing an online-only event live streamed